Okay, let's talk about something that's potentially good news. You are going to see this moving average all over Twitter. You're going to see people talking about the 200 MA, the weekly MA, not the daily, okay? The weekly moving average. And I'm going to explain it to you right now better than anyone can, because that's what I do best. I fucking explain complex shit as if you were not that smart. I dumb it down for you. I break it into layman's terms, because that's how I need to understand it, because I'm stupid too. So the 200 moving average. First thing you need to know is the 200 stands for the length, right? So the length means it's calculating 200 candles on whatever time frame you're on. So on the daily, this represents the average price of the last 200 candles up into this point. So people will sometimes use these as support and resistance and all sorts of fucking shit. But you are going to see this 200 weekly moving average all over the place. And again, it's the average price of the last 200 weekly candles. And the common thing that you are going to see is each bear market bottomed at the 200 weekly moving average. Now, what you need to consider is that when this is here, it looks good right now. But you have to consider that you have hindsight on your side here. You go, well, look, it fucking bottomed. It bottomed. But when you're staring this fucking big red dildo candle in the face, to have the balls to just buy it like exactly right now is crazy. Right? It doesn't mean you can't. Doesn't mean it like when it hit here, you gotta remember it went down another 30% almost. Same thing going on here, right? So we hit the 200 MA, but we're already down another, 7 or 8%. What if we go down here and then it wicks up? Those buys you bought here, they're gonna be sweaty for a while. Real quick, I wanted to give a shout out to the partners on this video. So this video is in partnership with Ciscoin. Ciscoin is a blockchain platform that's trying to take the best of both Bitcoin's security and Ethereum's malleability and scalability and create a protocol that will allow people who are creating applications on the Web3 to do so on an awesome platform. I do own Ciscoin personally. I want to be very clear about that. Ciscoin's actually been around since 2014. They're continuing to grow the ecosystem, continuing to work on things and develop. Most recently, they've partnered with Pegasus, and Pegasus is now running their test net on the Ciscoin platform. They've also just partnered with Decentralab. Another important part about that partnership is they're actually working with Chainport, which is the bridging service offered by Decentralab. So it's going to be a hard security next-gen cross-chain bridge, which will support full interoperability. So being able to chain your coins between different bridges is obviously something that's very important in DeFi. You want to take advantage of whatever farming and staking opportunities there may be on different blockchain protocols. You need to be able to bridge to them. They're continuing to grow. This is an ecosystem and a coin that has continued to iterate, make new partnerships, continue to grow the ecosystem. Thanks so much to Ciscoin for obviously partnering with me on this video. Again, this is me talking my own book here. This is a project that I own and I believe in, so do your own research obviously before making any decisions at all. So what you're gonna see everyone say is that this is where every bear market has bottomed. I much prefer the 80 to 85% off all-time high metric because I think that this isn't something that I'm confident in trading. However, I don't think you just buy the 200 MA. If you bought the 200 MA on the weekly, you're already underwater. Doesn't mean that it can't close up above here. It absolutely can. But this is a lot scarier when it's happening live. When price was up here, right? When price was up here, saying you're gonna buy here, you're like, okay, if it drops $20,000, I'm gonna buy because that's a great discount. That's easy. It's easy to say. But when you're now at it, a lot scarier. So I personally am not a moving average user at all, but I want to explain what it is and why you're seeing it. Do I think it's a good tool to look for areas where we might potentially bottom? Absolutely. We're near the 200 MA. Every previous bear market is bottomed around the 200 MA. So why not look for a price to potentially bottom here, but use the MA confluent with support and resistance, and I think you will have much better results. So, okay, we're at the 200 MA and we're also at key monthly support. That makes a whole lot more sense to me than just being like, I'm just buying because it's here. But yes, previous bear markets have bottomed around this, I do think that you have to keep in mind that the macro is a lot uglier than it ever has been in a bear market. But that's why everyone's going to be posting that MA. Now you understand it, and now you get to decide whether it's not something that you put any weight behind, if you give a shit about it at all. Okay, so that's up to you. Do what you want to do, and just remember, right, like, we can respect that 200 MA, but we can wick way below it. Like, let's assume it's here. What happens if we trade like this and then get back above? In hindsight, oh look, it just wicked below. But like, if you're holding for this entire drawdown, you're shitting your pants.